Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here is a chart of the market. These are intraday dynamics. This is where we've been. This video is for Friday, December, or still trapped in December, January 9th, and we're looking at Thursday, Wednesday, Tuesday, and Monday. Been a bit of a choppy market, as you can see here. Opening Monday, the first full official day of the year, we'll call it. Last Friday was pretty remarkable week, actually. If we look back over that, look at this beautiful trend as we go into the conclusion of 2008. Just wonderful. Everyone had taken in their tax loss selling, was buying back stuff. Just beautiful stuff right there. Beautiful green, green, accelerating green, more green, green, green. Where's the market going? Up, 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 up. And a bit of a different picture it has been this week. We look at Monday. Nice little double top action there. Although we did see some pretty bullish indications here. What do we get? We got a nice pop on Tuesday as a result of these bullish indications. We did get a bullish gap to the upside and actually surpassed the high of the prior day. But yet another double top in almost a mirror image of inverse mirror image, or actually mirror image of the day prior. Another double top, but as you can see here, the underpinnings were a little bit mixed. We did have some accelerating bullishness here, but certainly bearishness here, choppiness here, and arguable bullishness there. So definitely impressive, but just wasn't able to hold the market. We did get the gap lower on Wednesday. We got the gap lower, weren't able to even make an attempt really to fill that gap. We did run into the trend here. Nice little sell opportunity at the bottom side of this trend around 920. In the S&P, we're looking at the E-mini S&P 500 here, in case I didn't mention that. But we did have accelerating bearishness for the first time in a while here in our primary indicator. Secondary indicator, a little bit choppy, certainly bearish was the case here. Three-pronged bearishness followed by more bearishness. What do we get? Move lower in the market and a close near the lower end of the day's range. This was Thursday. What do we have? We had a bit of a basing period in the market. As you can see, we did have a positive divergence here. We did have more bullishness here. Certainly bullish here was the case. Weren't able to get above the trend, but were certainly holding the early session lows in terms of 895 in price. That's a very significant low, actually. It doesn't particularly look impressive, but that's a pretty impressive low. Rather, we should say important low in the market, and we'll look at that on the daily chart. But that's certainly where we stand. We do have the jobs report coming out on Friday. 670,000 jobs lost in December on the heels of 470,000 lost in November. So what that says is the market has discounted that probably here. Should we get a number less than 670 and get a market rally, that will be favorable. Actually, we would like that, because if you look at a chart of the daily, you see it right there. What we're doing here is, well, we went bullish against all of our indications were to remain bearish, but we definitely wanted to take advantage of the bullish opportunity, go ahead and lock in our discretionary official market timing gains. We went bearish at a price of 1377.66 on June 3rd. Is that right? I believe that's right. 1377.66. Went ahead and moved to officially bullish, skipped the neutrality, actually said add to bearish positions on this retest here before the acceleration moved lower. Did go ahead and move to bullish at 899. I believe it was 889. This says 899, so we'll call it 900. That's where we are roughly. Essentially, we did get this two-bar reversal buy set up here at a close of 800. Said add to positions. Did get a quick move up. We're now 110 points off of that close. On the two-bar reversal buy setup, which was just a beautiful positive momentum divergence, as we had mentioned. So definitely an opportune time to go ahead and take advantage there and add to some long exposure, which we recommended. And we do continue to expect a move to 1,000. We are getting a nice ascending pattern here. The trend will always win against, generally, we should say, against horizontal support resistance, and the trend certainly is higher here. We are retesting a very key measure, arguably, of trend following support resistance. Actually, I believe it's at a little bit higher than that, so we're right below it. But this round 900, we'll call it 895. 900 level in the S&P cash is very significant. We have the convergence of two key primary measures of trend following significance right around 900. This also happens to be the retest of this key Fibonacci band that we try to get above here, try to get above here. We're able to recently get above here, all three measures, and are certainly just retesting. So we definitely need to get a little bit of favorable news on the economic front here Friday morning on the jobs report, and hopefully we'll get a blast to 1,000. Certainly expect to see 1,000 before we do 800. If we do see the latter prior, then that should be that could be a troublesome sign, and we'll have to reevaluate at that time. But certainly right now we are and officially remain bullish on the S&P 500. So if you look, so that's the price technical perspective, the trend following perspective. From momentum, we are certainly still bullish from both short-term and intermediate terms, fully neutral in terms of directional movement, as you can see the picture there. If we take a look at, I don't know, just a couple of our systems, maybe a couple of swing systems. Our swing system 5.0, ouch, a beautiful trade, beautiful long setup, 8,500, we'll call it, up to 8,900. Nice 400-point move. Did get caught on the shorts. I won't say caught on the shorts. I did take a short opportunity in the market. We did have one errant trade. Unfortunately, we did have an errant trade, and that was a buy setup on this very choppy market. Now that the A team's back in the game, people are doing a lot of portfolio allocations and appropriations, so we're getting some choppy moves. So got caught on that short on the long side there, but would have been a beautiful 400-point winner in concert with another 200-point winner on the short side had we not had that errant trade, but did take a couple losses there. Swing system 6.0 still long from a level of 840 in the S&P, not 907. For a nice 67-point gain there in the S&P, still holding that long position. And there we have the Swing System 7.0, putting in some beautiful winners. Is the Swing System 7.0, 8,800 down to 80, we'll call it 8,700 in the Dow. And nice little gains there, nice little winners. Swing System 8.0, another beautiful setup, just a very nice, taking advantage of the lion's share of that move. Not getting in too early, not getting out, unfortunately, too early, but catching the meat of the curve was the system there. And let's see, we'll take a look maybe at the Day Trader 8.0. There you have it. Some nice winners, but it's been a little bit choppy. Day Trader 7.0, Day Trader 9.0. What we'll move over and we'll just minimize that. Take a look at our Russell System 1.0, and we're 2.0. We're definitely running out of time. So there's our 2.0, just nailing almost every turn. If you go back here, we can scroll back here, just nailing almost every long, every buy, every sell. Keep it on scrolling back, just catching a little bit choppy moves, but really catching the lion's share of these moves. As you can see, that's going back to well into November. But we're going to go ahead and switch over now, since we've unfortunately run out of time. Too much market analysis. MAFX Lite really back in the thick of things. We did have a big client talk about, is it time to get in Forex? And that was right ahead of this almost 500% move in MAFX Lite. There you have it. Made another 1,046.31 on Thursday for a gain of 469.9%, 0.5%. Futures has been a little bit choppy. We're just hanging in around 300% gain for the matte black, 250% over the last 71 days. 115 was the aforementioned gain. But if you're interested in subscribing to the MAFX Lite portfolio and getting involved in Forex, you can either trade a mini account, take 1/10 the risk, or return and return. Or a standard account, and really take advantage of a highly leveraged and aggressive portfolio. Have a little bit of a special for you. MAFX Lite, just go to add your cart, click on the home page, refresh it if you get something else. Go ahead and add a cart and enter promo code VIDEO right there. Hit apply, and there you see $300 savings. You can get that for $1,200. If you have any questions, feel free to go to the website, chat with the support team, or shoot us an email to admin@MiniAnalyst.com, and we hope you are having a great new year trading. We'll see you next time.